You might want to write this down. Rule number 1. When weakness appears in the market, in any market, it appears 90% of the time on what we call an up bar. That is a price bar that closes higher than the previous bar, but look at the volume that's associated with it. Absolutely enormous. It's called a spike. These were referred to in the days of Wyckoff, who we'll talk a little bit about in a minute when we bring Tom in, as a hypodermic. Right? Now, that is what I call a Yao Ming volume bar. Now, why do I call it Yao Ming? Okay, why do I call this Yao Ming? Well, first of all, Tom Williams gave me a very nice analogy of how to identify it with your own eyes when unusual volume activity hits the chart. If you imagine at the bottom of the screen here, this volume, which is all tick volume, by the way, okay, it's tick volume, and it's following what the market's doing, doesn't matter which NT platform you're using. If there's a high volume spike in the pound, or in the dollar, or in the, in this case, the Swissy versus the US dollar, you're going to see it across platforms. Now, we notice a couple of things about this price bar. This here is massive volume. I call it, again, if you read my book, Trading in the Shadow of the Smart Money, I talk about Yao Ming bars. If you imagine all of these bars here, just use your imagination here, are human beings, okay? And imagine an alien has landed in Chicago on the Mad Mile there, the Michigan Avenue, 3 o'clock in the morning, there's no one else about, and he asks me, he's doing a study, how tall am I? And I say I'm 6'2", which I am, I'm quite tall. This alien's got nothing to compare me to, alright? But, if Yao Ming came and stood next to me, he's 7'6", that's Gavin there, alright? And then my son Ryan, okay, who's about just coming up to about 3 foot, is down here, maybe even down here. You would know that Yao Ming is extremely tall human being. I'm pretty tall, and Ryan is quite small. So when you see a massive volume spike like this, and the market's going up, many traders who use MACDs and moving averages buy into these bars because they see the price going up and they think, oh, I don't want to miss out. However, when you understand volume spread analysis, which is what we teach, you'll realize that if that was all buying volume, the next bar couldn't close lower. But then we want to be able to look at the scanner in the software to see if we have trend alignment. So we come down here and you can see we've almost got, not quite yet because the market's going up a bit, we've almost got total trend alignment on the weekly, the daily, the 4-hour, the hourly, the 30 and the 15-minute chart. Now, this has turned green and this has turned grey because the market's been marked up. And that's how they do it. To make money, they have to sell into up moves, not down moves. You can't make a profit. Axine, I just saw your question. What's the second most important shorting signal? Okay, it's a buying climax. I know it's called buying, right? So don't confuse it with selling climax. It's a buying climax. It means that the market have been marked up at the top. Now, to buy a market, okay, to go long, you look for another signal. As the market collapses, this signal will appear, and I'll try and show you it in a stock actually before we go, that I identified in January as a stock to buy. Southwestern Energy, some of you will have remember that. And it showed this principle on it. Can anyone tell me what it's called? Anyone remember what it's called? Ken is the first to win the prize. Well done, Ken. You better get this in your mind, this principle, because it's very important. It's not easy to find, but with the new scanner, it can be found in a matter of seconds. It is indeed bag holding. Bag holding. It's a very, very, very important principle. And we'll try and show you it. It's called bag holding. And after that principle, the next one that's very important is called the selling climax. The selling climax. That basically means that the public, as Wyckoff, I'll use his word, have puked out the stock that they're holding or whatever instrument it is because they see continually falling prices and they panic and they sell right at the bottom. And this happened with a lot of energy stocks back in December of 2015. Right at the end of December, they were forecasting oil at $10 a barrel. It's now trading up at 40, So that's a complete load of rubbish. And then we're forecasting energy stocks to go out of business. Far from it, they became a great buy opportunity. Now, what I want to do now is bring in Tom Williams. Okay, now Tom is the author of Master the Markets, and he's the inventor of volume spread analysis. And I'm going to call him on the phone, and hopefully you will all be able to hear him as he talks. And we're going to talk today about these two principles. We're going to ask Tom to explain what's going on. So let me bring him up. Hence, the new scanners have not been shown publicly yet, and I won't be showing them publicly at the moment. Okay, I will do it when I'm quite content with them. There's still more work to be done, Hans, but I am using some of these scans to give me some alerts, which you're going to see in a second. If you come here, we'll go to gmx.com. I'll log in a second. Just bear with me. Let me bring Tom in. Gonna lose the screen for a second while I log into the email alert. I'll explain how we do it. I'm not going to hide anything. You'll be able to see exactly how we get these alerts. Let's just bring Tom in. Hello, Master? Howdy. Yep, let me just make sure everyone can hear you. Can you all hear Tom okay? Hello? Yeah, just do a quick sound check, Tom. Just speak for a little bit. Yeah, okay. Tom Winnie was here. Can everybody hear me? Yeah, sounds good, Tom. Good. Welcome to the webinar, Tom. We've got a big turnout here. Lots of new people have just joined us. Obviously, a lot of people questioning, do we think that the markets at the moment are bullish, mainly the S&P and the Dow and the Nasdaq? Although this is mainly a Forex event that we're doing this week to focus on the currencies. What would be very useful though, Tom, for the new people anyway, can you just summarize what is volume spread analysis? Okay, hang on. That's better. Yeah, okay. Well, right. Very, very, exciting and interesting. Volume spread analysis, I'll tell you that now. And, most people, once it pointed out to them, they can see it. And, they get very excited over it. Now, different ways of looking at the market, of course. There's traditional, way of looking at it has been, of course, you look at the fundamentals. Well, that's mainly what you would do if you're a fund manager or more longer term. But for scalping, and we like to scalp a lot. That means that you're in a trade probably for a few minutes, up to half an hour more, or less, I should say. And you're out, you take a little profit, and you sit back and it's a very exciting thing to do, actually. And I must say it's difficult if you don't know what you're doing. Because I tell you right now, most people lose money trading these markets, especially if it's for the scalping. And, we have lots of the answers, and, we brought hours of submissions on various tapes of the thing that will explain a lot to you. But basically, the markets move on supply and demand. Now, everything in the world moves on supply and demand, if you think about it. Almost everything you can mention, supply and demand. And the market certainly moves on supply and demand. However, there's a slight twist to it. And that's what misleads a lot of people. Supply and demand in the market, there's the fundamental reason why the market's got a foot down, fair enough. But for the shorter term, these spikes, these sharp up moves or down moves where you can make some money, are caused through professional money putting in huge amounts of money into the market, and they force the trade into the market. And you talk about a professional trader, he may have 5,000 trades, where we cover a small amount, but 5,000, 10,000 trades, and other professionals follow them. So this forces the market, and this is what causes the supply and demand over a fairly short space of time. Right, and that's, but they can't do that unless they put trader actions on the chart. And we can see it doing it. Right? We can see when they come into the market. We can see when they leave the market. We can see when they're manipulating the market, all sorts of things you can pick up. And they're all tradable, of course. It's very exciting. Supply and demand certainly makes this stock market behave the way it does. And, of course, once you can remember the chart, when you look at a chart, right, you're looking at a language. You heard of Braille and deaf and dumb language and so on. But a chart is a language. There must be something, mustn't there? When you look at that below the volume or activity, which is a very, very essential part of the analysis, which shows your meat places. Remember, at the bottom of the volume, those vertical lines represent the activity that's taking place by professional traders in the market. And then on that activity, you look up at the price range. What did the market actually do on that? Did it go up? Did it go down? Did it do nothing? Is the spread wide? Is the spread narrow? Right? And all that's part of the language that you will learn to read. And you will be very, very surprised how accurate it can be. And, you may look at a chart and perhaps not all the information may not be on that chart you're looking at. But I can assure you that we've got all sorts of different time frames running. Right? And within one of those time frames, there'll be all the answers. So, it's a skill. You've got to learn to do it. And there's a lot of psychological stuff you've got to pick up as well. But that's basically what's the thing says. Now, you might say, that we can prove to you, right, that what we tell you is correct. Because we have a computer system which runs live from incoming data, and it comes up with automatic signs, signals of either strength or weakness. And then when you look back on these signals and you say, ooh, yeah, they're not bad, that means that the information that you fed into that computer originally, instead of all the information we're telling you all the time, must have been correct. Because the computers do not understand flaws in your logic, does not understand mistakes. You've got to know what you're talking about for the signals to be fairly good. Or accurate, 100% accurate. And you will see that. So we can prove to you what we tell you is in fact what drives the market. Which gives you confidence then to really concentrate. And believe me, once you master the art of reading these charts, it gets so exciting. And you'll have that skill with you for the rest of your life. Now, Tom, there's been a lot of questions come in about trading VSA with Forex. And people say, well, the volume's a load of rubbish. You can't get volume, although, of course, we know we can. You think that the tick volume in Forex is the best you can get. So do you want to explain why? Now, imagine, right, you're Bank of America. And I'm Barclays Bank. Now, although we're banks, we're not all pally-pally. We're out to make profits for ourselves. And if I'm the bank, Barclays Bank, doing a big deal, in other words, large amounts of currency trading for some reason or other, right? I don't really want you to know exactly what I'm doing. I don't want you, Bank of America, know what I'm doing. So the best way, right, is don't give out the number of trades you're trading. So they don't know, really, whether you're trading small amounts or large amounts. That's the whole idea. That's why you get no volume. The volume's not there. The volume's not there, not for any technical reason. It's there to stop other banks and other traders knowing what you're doing. Or attempting to. Right? And that's what's that's why there's no volume. Official volume. However, I love that word, however. However, they can't avoid what they call tick volume. And that means that when you're doing large amounts of trading, that live tick bar's got to start working. It's got to be ticking up and down very rapidly, or whatever it's doing. Now, computers are very, very good at picking all this up. They pick all this activity up, and we call it tick volume. And that replaces official volume. Now, several years ago, I tested this for a whole year, tick volume, and it was so good, even the signals were better. It's so good, if I was given a choice of either real volume or tick volume, I'd have tick volume, because they can't interfere with tick volume. You know, they do interfere with volume if they get away with it. And you've got to say to yourself, in commodities, why do you have to wait next day for a result? It's the same thing. They know the value of volume. And they're not there to help you. They're there for their own benefit, not yours, I can assure you. But they can't hide tick volume. Right, and the computers are very good at that, and I can assure you that I tested it, and it works. It's very, very good. And so you have tick volume with Forex. So, it's very good. And it comes up with signals, and the markets all work the same. Supply and demand. They may have their own personal little, personalities, yes. But you soon get used to that. It's a good idea to specialize, if you can, rather than try to understand everything. Tom, just a couple of quick questions. What's your favorite currency pair? Which one do you like the best? Well, I suppose the pound, dollar. Yeah, okay, the GBP, yeah, we're going to look at that in a minute, actually, because that's setting up really nicely for a big trade this week. The rumours come out that the Bank of England are going to do something with interest rates, which should be quite interesting. They go, oh, no, they've already got another, I've already got a note. So that's quite interesting. Them romance to work on. No, exactly. So that's very, very interesting. We've got quite a few alerts coming in, here at the moment. I can hear them. You can hear them in the background. Yeah. Yeah, but the euro, Tom, you like the euro as well, I believe. I had a quick look at the euro earlier on, and that looks reasonably strong. Yeah. But the whole thing is, with these markets, the most positive thing you need to look for is a test in a rising market. Right? And if you see those, then you know it's going up definitely. Well, I'm gonna talk about testing today as part of this seminar because it's a very important principle. But let me ask you, Tom, you know, I've already given the audience the answer to this, but what is the signal that marks the top of the market? It marks the absolute top and it's gonna turn and come back down. Well, you'll find it in what we call the end of a rising market. Or, it's a form of climax, actually. It's a form of, climactic action. Right. Now, the reason why that is, that it will occur after there's been a substantial bull move. The market's been going up and up and up. People say, oh my God, Lou, it's going up all the time. Oh, and then suddenly, one day, it's probably gapped up on some really good news. But at the end of the day, you notice that the spread is very narrow. And the market's up. and the volume is very, very high. Now, there's only one thing can cause that. Nothing else can cause it. Professional spelling into a surge of buying as the euphoria of higher prices market. And that's a sign of weakness. And that will produce a red arrow warning you that this is a sign of weakness. It's very interesting. Well, we saw that in the market. We saw that in gold a few years ago, when everyone was telling you that gold was the safe haven. And of course you and I went on YouTube and warned everybody that it wasn't. But what's the opposite to that, Tom? The really good buy signal, which we saw after 9/11. And of course we see it quite a bit now coming in some of these currencies on the smaller time frames. Well, another one is the exact opposite. And that's what we call bag holding. It's, the term used, by chartists and by VFA. It implies, or it doesn't imply, it tells you definitely that the professional money are pouring into the market. Right? They've no caution, just piling in. What happens is that the market's been weak. It's been falling for many weeks or days or months or whatever. Right? The news is bad. Right, and then the market starts moving sideways because they've been buying it. And then one day it's gapped down. The end of the rising market's gapped up, but the buying, bag holding, it's suddenly the opposite, marked down. Right? And at the end of the day, you notice that the spread is very narrow. The volume or activity, remember volume is activity, is very, very high. Now again, there's only one thing can cause that. Nothing else can cause it. If they deliberately mark the market down, professional money on the foreign exchanges and everywhere are piling in buying. Right, and that means that market's bullish. Because once they've entered the market, that market then becomes bullish. That's called bag holding. And, the latest software that, is available now, I believe, picks that up. And it's very exciting. Now, it's interesting, Kantz had asked a question here about a high volume down bar, which has got very, very high volume that suddenly appeared. And he's saying, well, that surely, if it's a down bar, it's strength. No. See, what you've got to understand about any high volume bar that you see, doesn't matter whether it's a down bar or an up bar, if it's genuine strength, you would need to see it tested within a few bars, right? Now, testing is very important. Whenever, I had difficulty, Hans, with this initially, with this concept, where you say every single time you see high volume on a down bar, it must be strength. That is not true. Right, Tom? Yeah, right. Well, that's right. You see, the high volume on a down bar. If the market has fallen, has not fallen substantially in the background, then highly unlikely professional money are pouring into the market. It has been marked down seriously, right? Falls down by a heavy side. And if there was any buying in there, the next bar has to be up. And usually when the market's weak, it's not up. It's not. Well, we can see clearly here, Tom, the next bar closed lower and the price fell. Let me just explain something to you, Hans, as well. We have a system called scan, confirm, and trade, which doesn't just look at individual bars at all in one time frame. You will not make money just looking at individual bars in one time frame. So we have a scanner that tells us the overall direction of price action. And I'll show you again. We'll put it up here. Now you've got, hence I'll ask you the question, I'll ask the audience. What is the clear direction of price in the US dollar Swiss franc at the moment? And remember, the last bar here is the one that's completed. What is the direction of price? Please do answer it. Hans, you've just answered your own question. So why would you be looking for buying opportunities here? Unless I see a climactic bar, which I can show, which if I see it, the software will tell you. It'll come and email you. This is bearish. This is negative. Okay, I think I've just been filled on the other computer as well, so we're going to have a look at that in a minute. I had an order in just down here, and I think it's just got filled as well, so we'll go and have a look. This is all day today. I have been getting short alerts on this instrument. All right? No surprise. Look at the 5-minute chart. You've got a trap up move. But look at the weekly chart here, Hans. There is one of our key principles. And if I was to put up a weekly chart, you see, I'm still getting alerts to short it as well. If you were to put up the weekly chart of the US dollar Swissy, which I'll do at the end, you'll see why this has fallen. So you use the biggest time frame as your guide as to which direction price is going to move. I use the weekly, the daily, and the 4-hour charts. And then, once that direction has taken place, we then say, right, if it's negative on 4 of the bigger time frames and it begins to roll over on the smaller time frames, we want to be looking for short trades. And again, I'll show you how, very quickly, you can identify which Forex pairs are moving negatively, positively, or in congestion. And let me ask Tom this. Tom, you've seen the scans that Grigory has done. Yeah. They've made a massive difference to the speed at which you can find a trade. Well, you said to me when I first met you, you know, why do you need computer software to trade? Because if Wyckoff had it in his day, he would have used it. And it simplifies the process, doesn't it? The whole process of trading becomes simpler because you're finding trend alignment, which you're seeing right here. You're seeing all the alerts coming in, okay? They keep popping up on different time frames. Yeah. You can't keep up with because for some reason today, Monday isn't always the best day to trade, but you've got a lot of stuff happening on this Swiss franc. And Hans, let me point out to you here that the reason that this fell to this level, which is a key level now, if it breaks below this level in the next hour, it will have a very big move further down. Because what it's doing, this is in control. The weekly chart. Okay, let me show you it. All right, probably should put that up here. Let's just change that to the weekly chart for a minute. And I'll show you what I mean. Now, here is the downtrend clearly in place. You can see that the diamonds were red here. And then last week, they mark it up to catch longs. People think there's a breakout over here. And all of a sudden, it closes on its low. It's got a signal on it. I'll ask Tom about this one. Tom, this is sign of weakness 58, a trap up move. It's one of my favourite principles after the end of a rising market. I see these happen all the time. And so don't forget, everything that we show you, or everything that makes this market work like it does, is based on common sense. Right? There's nothing clever. There's no magic there. We don't have any secrets. Matter of fact, we tell you them all, every one of them. Right? Imagine you are a professional trader. You've seen all your mates that you've been heavily selling on that last up move. Right? The market's been held up. Right? So you could possibly sell some more in the next wave up. Right? And then suddenly on some good news, you think, right, well, if I could mark the market up quickly, it'll panic many, many traders. It'll trigger off thousands of stops. It's going to make me and my mates a lot of money. And that's what we call an upthrust. And that's why they're there. Right? It's trickery. Caused by the professional operators wanting more money out of you. Yeah, and just to be clear, Gar, one of our long-standing customers here, has made a very good point. If you're trading futures, the 6S, the Swiss franc, you would not be shorting it, you'd be going long now, the 6S, okay? Graham, I'm not going to show that here because this isn't a technical webinar, but every Thursday we have a technical webinar. I'm going to email the link out for that shortly. With Gregory Margolin and AJ Robinson, where they cover all of that. They'll show you it. It lasts for about an hour and a half. They're going to do it again this Thursday. I will send the link out, Graham. Make sure you look out for it. If you don't receive it, in the next 48 hours, then just email me, gavinh@tradevider.com. Now, Alan's asking what's the optimal time frame to trade the currency futures markets. Depends what your strategy is, Alan. It's a very difficult question because I've got traders trading $10, $20 million accounts, and they're trading on a longer term time frame, and they're in the positions, their currency positions, sometimes for weeks. I've also got a lot of customers who are retail traders trading a $2,000, $3,000 account, and they're scalping the market. They're in there for like 4 or 5 minutes, and they're using a 1 minute, 2 minute, 3 minute time frame. So again, is there an optimal time frame? It depends on you. I have to say, if you have an educator out there telling you this is the only way to trade with this time frame and this thing, that it's wrong. Now, I can tell you that Tom and I, when we're scalping, we like to use the 3 minute, 5 minute, 15 minute and the hourly charts, and I take my trades mainly off the 5 minute time frame. On average, I'm in a position, depending on what's happening, I can be in a position for 3 or 4 minutes. Sometimes I can be in it for a couple of hours. And I'm never in a position on the smaller account that I trade overnight. We don't hold it. When I trade with Tom, and we trade all the time when we're together, generally speaking, Tom, it's safe to say, right, that we don't hold positions on that small account that we're trading. No, right. But the main thing is, right, it's all very well talking about it. We're in the trade for making money. But if you've made a mistake, and the trade's not working for you immediately, you should close the account out straight away. Because the way these markets are designed, they're not going to let you out. Once they've got you on the wrong side of the market, that's where you have your forced out by lower prices. Or if you store higher prices. That's very important. Yeah, very, very important. Alan, just to answer your question, I'm going to come on to that very shortly. Is there an optimal time of day to trade the Forex market? There's 2 or 3, actually, where I trade. Right now is when I would be paying close attention, especially on a Tuesday and a Thursday and a Wednesday, those 3 days. I don't like trading Mondays particularly because you tend to get a lot of testing of the market. Well, they're aren't they? Yeah, you don't tend to get a lot of good trades on a Monday, to be honest. Sometimes you do. It's not... Again, I'm not giving you, this always has to be the case. The markets have been extremely volatile after the Brexit, and there has been some very good trades. I'm looking at the pound at the moment. Now, are you all familiar? Just type in yes or no with the LIBOR fix that happens at 4 p.m. London time. Do you all know what that is? And if you don't, I'll explain it to you. Just be honest, yes or no. Do you understand the LIBOR fix? Do you know what the LIBOR fix is? Mark, we're not breaking up. I think it might be your internet that's a problem, Mark. We're all good. Everyone, can everyone hear Tom and I okay, by the way? Just want to make sure that we're good. Oh, it is breaking up. Okay, I don't know, no reason why for that. Don't understand. Because I've got a good connection here. There's a lot of improvements to make with this broadband, apparently. Yeah, that happens. Yeah, it could be the internet today, guys. I'm sorry. It won't be on the recording, which I will send out to you. So bear with us. Tom, what I'll do, I'll stay on the line, Tom. I'll end the call, Tom, and I'll give you a call back in about half an hour. If that's all right. You want to call me back? Yeah, if you could have a look at the S&P and the NASDAQ, that would be great. I'll get your opinion, on that. All right, thanks, Tom, and we'll see you in about half an hour. Cheers, bye. So, all right, guys, you got me now. Hopefully that might make a bit of a difference. Let's do a quick sound check. Yes, we have got bad weather here. We've got thunderstorms, so, it could be that. Don't know. But let's try this. Let's see if that's any better. If I just move the mic a bit closer. So that might help. Alright. So, let's talk about, so alright now, I thought it might be. It might just have been the way we were connecting to Tom there. Okay, now we've got, the London fix. Alright, now there are 3 times of day where most of the time I make my money and I don't need to trade all night. So here is the times, the optimal times, for trading. I don't know. Let me just do a quick speed check. I'm just going to, stop sharing screen. While I'm talking about this, you're not going to see the charts. I'm just going to, here we go. Right. I'm just going to do a quick speed check and see if the internet is at fault here. And if it is, don't worry. I'm recording this, so you will be able to see it. But it could pick up very quickly. So we'll see. So, let's talk a little bit then about the times to trade Forex and currencies. And there are definitely times when, when the market does nothing and you're not going to make any money in it, and when it really starts to move. Now, I start my trading day usually around 7 a.m. in the morning, UK time. And what I'll do if I'm decided to trade that day is I will first of all do a scan, which I'm about to show you how to do. Now, I can tell you that the internet is extremely slow, so there's definitely a problem. So just bear with me. Hopefully it'll improve. I'm getting about 20 megabytes download, and it's the upload speed that we want to see if I've got high speed. It could be the storm that's come in. I don't know, but as long as you can hear me, yeah, okay. I'm just looking at it now. I think it should be fine. It's gonna be a little bit of, choppiness there. But anyway, so let's talk about the optimal times to trade. Now, the first trading session that every currency trader wants to be looking for is the London Open, when the UK market opens, all right? So for us, I start looking at the Forex charts at 8:30 a.m. UK time, okay? I've already done my mental preparations before that. 8:30 a.m. the charts are opened. And the next thing you want to be doing is we want to be doing a scan. It's the first thing we do. Now, how do we do it? Can everyone see my charts, please? You should be seeing the chart of the pound. Can everyone see the charts before I move on? Okay. So, it's Monday morning. It's 8:30 a.m. I want to find a currency pair or this can be in the futures market as well, but you have to keep in mind, if you're trading currency futures, which I also do, that some of the pairs are inversed. The Swiss franc is a good example, which means if you're short in the Forex pair of the Swiss franc versus the US dollar, you would be long in the 6S. All right. But again, we've done a training course on currency futures and Forex trading. I'll show you where you can get that, and it explains it in an awful lot more detail than I can cover here. Now, let's do a scan of all the currency pairs in less than 5 seconds. Okay? So, you know what the scanner looks like? Now I'm going to scan all the pairs, the majors and the minors that I trade and that I monitor. 3 seconds, 2 seconds, pretty damn close, alright? So what the computer has done for us there, which a human being can't do, is it's looked at all the time frames. Okay, and I'll just explain to you what they mean. This is the British pound versus the Canadian dollar. M1 means 1 minute chart. M5 is a 5-minute chart. 15 is a 15-minute chart. M30 is a 30-minute chart. H1 is the hourly chart. H4 is the 4-hour chart, the daily and the weekly. That gives us a very good representation of the bigger trend and the smaller trends within. So, let me ask you all a question. Looking at the weekly chart here of the British pound and the Canadian dollar, what trend are we in on the weekly chart, ladies and gentlemen? What trend are we in here on the weekly chart? Let's just put the scanner back up. Just bear with me. That's it. So, what trend are we in? Oh, I've just closed it, but hopefully you all saw it there. Indeed. Yes, it was short, that one. Okay, good. Let's look at the euro then. Again, we'll look at this chart here. Are we in an uptrend, a downtrend, or are we neutral at the moment in the euro? Okay, that was neutral. Okay. Again here, I'll just explain it to you. The pound CAD. You can see the weekly chart that we looked at. This is the one we were looking at before. Okay, is negative. And you're all right when you said it was down. The 4-hour is down. The hourly has got a sign of weakness on it, but it's still pushing up. So in this situation, we would say from our training, no trade at the moment there. Okay, the pound versus the Swiss franc. Okay, we've got a very strong weekly downtrend. We're neutral on the daily, but we're starting to roll over on these small time frames. This could set up, well, no, I would bet my bottom dollar this will set up either later today or tomorrow for a trade. And which direction, ladies and gentlemen, do you think it's setting up, long or short, based on what we're showing it? What do you think, long or short? Correct. Correct. You've all got it. Absolutely, it's a short trade. And why? Because the weekly chart has got sign of weakness 58 and it's going negative. Yes, we've got some confusion on the daily, but it's now starting to roll over on the small time frame. Okay. Now, this is the pound Aussie. Again, a minor. Would you say here, ladies and gentlemen, based on what we're teaching, you trade or no trade at the moment? Like, I'm going to pull the trigger right now. Trade or no trade? What do you think? Interesting. Yeah, I would not be taking a trade here, but if you forced me, you said you've got to take a trade in the direction, I would be looking for a long trade. Based on this here, which is a new signal, okay, that Tom has developed. It's not in the public software yet, and it's why it's going up. Now, if you look at it, it's 199, no demand, followed by an immediate test and another test. And these tests are why this money, you go and have a look at the chart of the pound Aussie, that's why it's going up. Because of what happened here on the 4-hour chart. So if you force me to take a trade, I'd definitely be looking at a long trade here. You've seen exactly the same thing happening here on the Euro New Zealand, same signal. You can see it's picked out a bit of weakness, but then on the small time frame, it's starting to push up. And you can see the boxes are turning green. If in the next 5 minutes X turns green, you've got almost trend alignment on the small time frame. So the Euro New Zealand dollar is very, very positive. And this is all happening because half an hour's time, we're going to have the London fix. It could be very, very interesting. Good. Right. Is there any questions so far, just while I set up this backup computer here? I'm going to do it quick because you said the sound was breaking up. I'm going to try a backup computer. Any questions at all before I move on? Okay, let me just have a look at the questions before I move on. Okay, I'm going to come to my hands. I'll answer that question now then as you've answered it. Right, the question is, after the London Open, when is the next best time to trade? And it's right now. It's between 3 o'clock and 4:30 p.m. London time. Hence, by far you'll see, not always on a Monday, but tomorrow we will definitely see some movement. Okay. Michael's just pointing out that we should look at the pound and the yen. Thank you, Michael, as one of our customers. So the next time is basically the US Open coinciding with the London fix. All right. So the US Open is at 2:30 UK time. I don't trade the Open. I usually don't have any positions running. So at sort of 3 p.m. London time, you start to get some movement, especially on a Wednesday and a Thursday as well. Jim, yeah, good question. Jim just said, if you're scalping the market, would you just look for the smaller time frames to align and ignore the big ones? You would. If you're going to be in there for 3 or 4, 5, 10 minutes, 20 minutes, don't worry about the weekly, don't worry about the daily, don't worry about the 4-hour, don't worry about the hourly, but definitely look at the 30, the 15, the 5, and the 1. Those are the ones I use, and I use them all the time. So Jim, to answer your question, that's exactly what you would do. If you're a scalper, you don't need to worry about the weekly and the daily charts or the monthly charts. But if you're swing trading, which we have a lot of people on our database that do that, they want all of those trends to align. And when they align, they can clearly see that there's trade setting up. So here you can see on this chart, the euro at the moment, it's trying, Tom said it looked a bit bullish. It's trying to align to the long side. Now here's another one, the Swissy, okay, and the US dollar. Again, I'll ask you the question, the audience. Would you be long, short, or no trade? What do you think? Long, short, no trade. What do you think? I'm just letting everyone type in. Just bear with me and I'll tell you the results of this in a second. Absolutely. Absolutely. That is as good as it gets. And in fact, I'm just going to leave this up here for a second while I'm logging into the computer. And we're going to watch to see if we get any signals on the 1 minute chart which will appear as the box fills. So keep an eye on this box here. All right, we had an up thrust that appeared over here. So you've got your second red box. Okay, and we're just going to watch these boxes fill because you've now got here the same signal that we saw earlier, the trap up move on the weekly, total trend alignment. There's no demand on the 30-minute chart, which is causing this all to fall, number 199. And what I'll do is I will do a detailed analysis of this shortly on the actual chart so you can see it for yourself. For the next few seconds here, about 2 or 3 minutes, let's watch to see what happened on the 5 and the 1 to see if we get any VSA principles. And I think we will because of the London fix. Yeah, I'm going to give you a copy of the books, in about the next 15 minutes. I'll give you the link for both of those. So don't worry. We're just watching here. Okay, just so you know what we're watching. We're watching the scanner running live. We're watching the trend alignment. We're looking here to see if we continue with these red boxes, the price will fall. And then we'll go and analyze the actual chart itself, and I'll do a detailed VSA analysis of the chart for you so you can understand when the trade setup appeared, why it appeared, what it's looking at. Okay, I'm just going to have a look at the alerts coming in. We should start to see we've got one that came in here a few minutes ago. And it's on silver. Okay, I'm going to go look at that on the other computer. We're not trading the commodities in this seminar, but these are the alerts that come in. As you can see, sometimes you'll get 30, 40 a day. Sometimes like today, you'll only get 10 or 12. That happens. But I suspect coming into the London fix in 25 minutes, this will take off. I'm pretty certain it will. But we'll see. I don't know. When we do these events live, we're not using PowerPoint slides. You know, we're doing this as it's actually happening. Let's go and find that other one. Just clap those down. Euro Swissy. There's one aligning to the upside here. You can see it. Okay. Let me just close all these down. And we'll go back to that Euro. The, Swissy. So just bear with me. I'm just having a quick look at these now, just to see if there's anything. There's quite a few in alignment here. There's a potential scalp trade on the Aussie, so I may go and trade that in the futures market as well. You've got a nice up thrust there. You've got 2 no demand bars. This is a good day. Actually, it's setting up beautifully for this week, which is what I thought. Okay, and there's the USD Swissy. So let's bring the scanners back up. Okay, so here we can see we've got 5 bars, so I'm just going to stick with this for a second. Jim, what we're looking for at the moment is a VSA principle to appear on the 1 minute chart. Okay, you have a loss there, and I'm just logging into a backup computer here to look at the futures market. Okay, so you've now got complete trend alignment on all of these instruments. The 1 minute chart has been going down. The 5 has been going down with a sign of weakness. So let's go to the actual chart now, and we'll do the actual analysis of that chart. Okay, this is the 5 minute time frame. What I'm going to do is pull up the complete profile. Now, these are the profiles that I'm monitoring. Okay? Yeah, I've just got an alert coming on the pound Swiss as well. So we'll have a quick look at that, and then I'll set the profile up. How do you set a profile up? I'll show you right now, because I've got the profile for set up here on the USD Swissy. So all I've done now is load the profile. Now, in order to load the chart for the US dollar Swiss franc, you just literally drag onto there. Same here. Same here. And then we'll show you why this is why this is falling. It's making new lows. It's got a clear support level to the right of it, which if it takes that out, it'll have another leg down. So we're going to be quite cautious about shorting at the bottom here. I'm just going to wait to see what's the big picture showing me, and I'll show you how we do that on these different time frames. All right, now to save it, you're just going to File, Profiles, Save As. Click OK, and now that's saved. Okay, so again, we come in here, we bring up the scanner manager. We can see we've got 2 grey boxes now as the market starts to whipsaw, but we start to analyse the chart. So we start with the big picture. Weekly chart's been moving sideways. Do we have in the background last week a sign of weakness? The answer is yes, we do. Okay, it's called a trap up move. Pretty high volume, not massive, but high enough to be a trap. And we would expect here to see lower prices. Daily chart, we got lower prices. You can see on Friday we fell, which is causing the trap up move. Yes, there's an attempt to hold the market here, a little bit of strength, but that will not be confirmed until that bar closes higher, which it hasn't done. The 4-hour chart, today we can see the trending system, which is the thermometer here, is red. The medium-term trending system is red. The diamonds are red. And look in the background here, what do we have? The same indicator. Look at the move that happened for 24 hours, or no, 48 hours after that indicator appeared. That is a serious sign of weakness. Okay, what would be a target on this particular instrument? I'll show you in a second how we generate targets. I use something called a point and figure chart, which I haven't got time to show you here today. We're not going to have time to do it. But if you're interested in finding out about what we teach, we've got a course on point and figure that I did with a guy called David Weiss, who's a great trader, last year. And that course is available, and it teaches you how to generate profit projections. Now, here's another great example of this. Is the hourly chart of the Swiss and the US dollar. First of all, can anyone spot Yao Ming on this chart? Can anyone see a Yao Ming bar on this chart? And if so, where do you see it? Remember, Yao Ming bars are volume bars. So where do you spot the high volume bar? Do you all agree? Does everyone agree that's the highest volume on the chart, right? That's it. It has actually marked the top. Now, this is one of the exceptions where I said that weakness appears on up bars. This is one of the 7 or 8 signals in the software which appears on a down bar. And it's exactly the same as you saw on the weekly chart with exactly the same result. How important do you think it would be for the scanner to find that principle and email you? Well, now it does. And in Darren and Abraham's trade alert service room, which we use in Skype now, every time we see that principle, we put it in the trade alert room. I'll tell you more about the room at the end, for those of you that want to join us tomorrow. Okay, so now we know we're in a strong downtrend. You can see the volume thermometer, which I haven't talked about much, but it measures bullish versus bearish volume. It's proprietary. I'm not going to explain how we do it, but it's very powerful. And you can see here that when it aligns with the medium-term trending system and these diamonds, which are the short-term trending system, you have got a very good directional trade happening. And it's the trap up, very powerful. Yeah, this would be a lovely chart to put in one of my books. The trap up move, lovely signal. 15-minute chart. Now we can see here we've come all the way down and we've got quite a key area of support, which is why this green indicator has come in. It's stopped the market and it's just going sideways at the moment, but there is weakness around. You can see you had some hidden selling and it fell. And you had over here, that's got to be no demand, I'm certain. No demand. No demand means lack of volume as the price rises in a downtrend means the market's weak. And then finally we can go to the 5-minute chart and you can see here it's been whipsawing into the London fix. That very regularly happens. And that's why this market has begun to fall. And it's fallen since this bar here. This was the markup this morning. That's what they do. They start it up, catch all the long and boom, back down, whipsaw it here. Now what we want to see, really the safer trade, is if it broke out below the low of that bar. Good, okay. Alright, so let's go and have a look at some of the other Forex pairs. And what we're going to do here is because you can, if you're trading on a scalp, you're scalping, you need to do this scan every 15 minutes. Okay, here we go again. Okay, and we got the US dollar. Let's just put I need to do it very important when you're doing the scans. You must have the scan profile selected. Okay, you see I've got scanner all here. So I've got to load the scanner up to do the scan. Now that's why I use 2 computers, because I have this on another computer as well. Takes about a minute for all the scanners to load, not very long. But if you have them running on a separate, because you can have it running on the same computer and then just change profiles. It's entirely up to you. You don't need 2 computers if you don't want to. But you just have to be a little bit patient as the scanner loads, because it's actually loading about 24 charts at the same time. Okay. Damien is saying that there could be a long setting up on the US Canadian. Well, we'll have a look. We'll do a scan and we'll ask the audience, Damien. How about that? We'll see what they say. While I'm doing this, let me show you where you can get the download of the books while that's loading.